All right, come closer, everybody. I have some secrets to leak you to. And listen to a lot of people when it comes to trading, they say you a lot of things. Now, let me tell you one thing. No strategy is wrong in trading. It all depends on the type of trader you are and what you understand. Every strategy that we think are wrong or not working, they have been abused. All right. So no matter how powerful a strategy is, if it's been abused, it won't work. If you abuse a strategy, it will give a wrong answer. So just like you're asking a wrong question, you get the right answer to your questions, but it will be wrong to people listening just because the question too was wrong. And so answers are given based on the template of questions. And that's exactly what I'm going to show to you. Now, people trading, they tell you a lot of things about indicator. That indicator is not good, it's lagging. Now, what I tell people is that it all depends on what you know about indicator for and what to use it for and how you use it. So quite a number of people have been abusing a lot of indicators. Now, there are two major indicators, oscillators and then whatever. So now we have a trend and we have a momentum indicators. Now, one of the things I want you to know, and I'm going to put you through, first thing as a beginner, strive to understand how to trade the market with what the market is. And what is the market? Market is basically by price. So you have to learn how to understand the price movement of the market. Every other thing is a supporting tool to help you, of course, make certain decisions based on certain, issues and principles. But the basic thing, everything about trading has to start with what? The price action. And that has to do, because everything's about price. So anything you are doing outside price, just a supporting thing. So do you understand? So you should understand this. Now, when you are using supporting tool, it should be a supporting tool. You should not replace what is the focus. Your focus is to detect price movement and then to be able to make money, decide and negotiate with the price. And one of the things, write it down. One of the fantastic things about price is that liquidity is the fuel of price. So it's liquidity that engineer the movement of price. It's liquidity that determine where the market want to move to. Now, so you negotiate with the price based on liquidity and then based on the other sentiment. So these are factors. But good number of people, when you listen to them, they tell you, I use the most perfect strategy. It's not true. There's no most perfect strategy. Every strategy work. Now, the strategist himself who want to use this strategy, to what extent does he know this strategy up to? And how does he know how to use this strategy? They are very important. These are critical things that people must understand. And then when I listen to people say, oh, you are still using indicator. No, 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 I don't use indicator. I trade without indicators. It all depends. So pay attention. Don't let anyone fool you, but strive to understand price. First is the fundamental thing you must learn to understand first. Do you really learn? Are you really getting aligned with market to understand the market by price? So, because when we talk about market, the next thing that should happen is the participant and then the negotiation of pricing. So goods and services in the market are being priced. So you reach an agreement. And that's the same thing in the market. So forget that this is a digital where you don't meet anybody, but you are still lobbying with people. So negotiation power is very important. Now, how you able to now negotiate with price is now depending on how you know where the liquidity is and then what you know about the liquidity. Now, when you talk about market, open price, normal conventional market, you go there, then you buy cheaper or you sell expensive, you buy cheaper if you know when there are volumes of those goods are. Somebody who does not know where the goods are, he will buy very high and he will sell cheap. And he will get frustrated. This market is bad. I won't go to that village market again because I couldn't buy anything. All the little one I bought them very expensive. Do you get it now? So these are issues. So I'm going to take you through on the market to understand. And then when you talk about indicators, what are the purpose of indicator? I've told you that everything apart from price is to support your decision. And then, but when you now allow what should be a supporting tool to your decision become your decision, that become a problem. So you have to settle down to understand how to use things to support your decision and not to replace your decision. Once you replace your decision with tools, then you are going to be subject to the tool. That's the thing. Are we together, please? So I'm taking you through a very fantastic topic this moment. And so don't fail to pay much attention. Let's quickly look at the market. Price is fractals. Now, how do you trade? Very simple. We have what we call P and L trading strategy in PBS Club. And so how do we do that? We just look at the market. So I take this instrument. I take any instrument anyway. So first of all is that there are different regions of the market price. So you come to the market. So mostly you want to look at the market. Where is the price now? Where is it? What is it doing? And all of that. So sometimes you want to check some history of the market. Now, as a beginner, there's something I want you to know. Learn to understand where the market was priced at a given time. And then that's talk about, okay, the region at which market agreed upon, where you have more negotiation and later agree upon this price and all of that. So the first thing you probably want to look at, so because I'm using this derive, so I'm going to just create something. Let me create something for you guys. Now, I'm going to delineate the market into different fractals, which is, I refer to them as zone. Now, see this top zone is the ceiling, right? And I'm going to take another one as the floor. So let's say this is the floor. Now I've gotten this now just basically just to delineate the market. Now I'm not going to tell you so much about why I delineate the market this way, okay? But there are so many other things you want to look at in between as the market continue to move, right? So I'm going to go to 4 hours quickly. Now, or ordinarily when I come in a day, I want to look at where did the market actually practice? What did it do yesterday? So that will make me to take my horizontal ray, for instance, and I want to know, okay, what did it do yesterday? You say, oh, this is the high market price yesterday was so, it's ended very bad. It was so expensive and all of that. So, yeah. Okay, so where are they starting from today? Do you get it? Where are they starting from today? So where they started yesterday and where they ended are called liquidity area. Oh, what's their closing price? What's their opening price that yesterday? Oh, was this market? They bought at what price yesterday? Oh, I missed that price. Okay, what price do you think I can buy today? Let us see. Some people who have made so much money yesterday, they want to sell today. So let's wait for them so that you can buy and then, stuff like that. Do you understand? Oh, you bought yesterday. Let us see if you can sell, very expensive and buy back again. So I'm just creating this template now. So I'm going to go to a lower time frame. So daily time frame is very important for me. So ordinarily, this market today is supposed to be bullish. Okay? Supposed to be bullish, but there are issues about that. So I will talk about that later. So I go to 4 hours. Now, what I'm looking for in 4 hours is different from what I look for in daily. What I'm looking for in 4 hours, I'm looking at the real structure of the market. Now, you can see that I've delineated this market from zone to zone. So ordinarily, on 4 hours, I should be looking at the structure that play inside it. If you are a long-term trader, you want to look at on weekly and look at what play out by daily. So, but you have looked at daily, and then on 4 hours and 1 hour, you want to see what play out in them. Do you get it now? So quickly, if I look at this market now, look at this market quickly. Now, as I look at this market, what happened? This is the highest the market went yesterday. That means this market is supposed to be selling. Felix, why do you say so? Okay. Now, why will it be selling? Okay, now. Yes, yesterday price got here. Today, it pushed up the price and now come back inside the system. That means the market's supposed to be selling. So to what extent will it settle? Maybe we'll go back to where the price was yesterday. Okay? So how do I achieve that? Okay, it's a very simple thing. Now, but I identify certain factors. You want to know more detail about what do we do? That's what we call liquidity taking off. So it's taking off the liquidity, and then so the market should be going down. So, but another thing by my structure, since this is 4 hours, I now look at structure. That's where you now look at what we call market structure. You want to know more about market structure and price movement. Now, why? As at before, the structure, the market moved like this and stopped here. You see, this place is stopped. It's called resistance because it was going up. Now, before the resistance, so it actually corrected down here. Can you see that now? So it corrected down here. Now, it push up and break this. So breaking this is that you wait for it. Let us see if you go to retest and continue, which is supposed to be. But in this case, instead of retesting and continue, what did it do? It broke down. Oh, yes. It broke where? It broke down. Oh, why do you break down, Mr. Man? So why do you break down, Mr. Man? I don't have energy again. Oh, okay, no problem. So what should I do with you now? So I want to look at, so when the market take out this, all right, and this is the previous day, and then it take out this and broke this. So when it broke this, and I say, okay, this is what I'm looking for. To what extent will this man come back to this up for me to find where I will sell it if you will agree to sell. It actually came to extreme. That means this market is still very, very, very fragile. Okay, but nevertheless, he had pumped here. This is the previous day. So that means this market broke here. So I want to look at the market to come down. So that means ordinarily, after this engulfing candle, this rejection candle is my entry. But how will I take this entry as easy as that? So we'll go back to 1 hour time frame. If you are a swing trader, that's a long-term trader, you probably will have entered at that rejection. And that rejection was this bearish engulfing candle. You will have entered at that point. So if you look at it now, where we're still checking, it has created another substructure. How many of you see it now? We have created another substructure, and no many of you wouldn't see it on 1 hour time frame. We have created a separated structure, very neat separated structure inside that daily time frame. This is a dealing range on daily. Oh, yes, I could find that. That's true. That's true. Oh, why? Okay, here. Come here. He broke to this point. This is a low. Then break here. And then create another low. Rejection. So that means you are looking at this market may travel back up again and all of that. But nevertheless, this engulfing candle ought to have formed your selling rejection point. So let's quickly just step down to maybe 30 minutes to what you are doing is to refine. That's what we call top-down analysis, or I call it top-down scanning. Okay, so now the market got here, broke here, so change of character. So let's go to 15 minutes. That's the place I'm going to stop, okay? So I'm just doing a summary, and I will show you something I want to tell you about indicator that many fail to understand. The market travel up here. So this is, okay, 1, 2, 3. If it's not up to 3, if it's up to 3, makes sense. Then we have this, okay, break here, return. So that means this is market structure shift. So you are looking at this market now. Let's look at it on 15-minute time frame. Can you see something? You can find it now very quickly. So let's do that. Okay, this bearish candle now, it should be. That should be. So that means this is a break of structure already on this internal structure. So let's go here. So that means this market may travel to this point. Look at it. This is a fair value gap. So let's see how it's going to land on it and reject it, or even it's like it has done that. Then you look at it. This is an order block. Okay, so if that's the case, once you reject here, you are selling and targeting. These are liquidity. These are liquidity. Remember where we target? Down here. Now, why do I say what people say about indicators, that it doesn't work, it is scam, they say you a lot of things about indicator, they will never use indicator and all of that. Okay, so let's quickly look at it. Indicator help you in this dimension. I would give you 2 major indicators for beginner. Number 1, trend indicator. Number 2, momentum indicator. All right, so trend indicator is moving average. So you're going to use these 2 major moving average. 200 moving average and probably 50 moving average, or 200 moving average. Okay, I may not expose this secret of scalping with 1 minute. So I will not tell you the other moving average for scalping 1 minute. When I do a video, I'm going to tell about that. So, but these 2 major moving average, 200 moving average and 50 moving average may help you. Now, why? So because now on a higher time frame, when you have 200 moving average, market above 200 moving average, it tend to be what? An uptrend. Market below 200 moving average, it tend to have changed direction into a downtrend. That's on a higher time frame. Now, so when you are trading on that, so if I'm on 15-minute time frame now, so market has crossed over, some market can be choppy, because if you look at this market, it's choppy. Now, so if market have crossed below 200 moving average, that means I should be looking for more sell, and all of that. So, but in this case, this is not the case. Now, the second indicator you want to add is called MACD. So I have MACD here. Now, my setting is different from your setting. I want to know how my setting become like the MT5 setting. Maybe you come into our ecosystem. Now, look at it. So look at this MACD. So let's take off the moving averages so that you will not complicate yourself. Now, let me quickly tell you something. What we do not understand, or what we abused. I talked to you about abused. Now, remember this market now, we have detached it from the original state. This is the original state of this market. Have you seen that? We've detached it from its original market. So now look at it. Look at what MACD did here. Now, MACD give you two major things that you must understand, just like RSI. MACD is very easy for people. MACD work in a trend because it's a combination of moving average. I hope you know that. Now, MACD work in a trending market. When the market is not trending, if you use MACD, it will give you false signal. Number two, you don't trade with MACD. You use it to support your decision. Don't abuse it. What's supporting decision? All right. Now, let me tell you now. Market was coming down here, right? This market was coming down on this 15-minute time frame. Now, here we come. The market continued to move and all of that. You have this. This is swing point. So where the market actually want to turn around. The market want to turn around here. But when the market want to turn around here, I won't take this market serious that you're turning around because look at MACD. The momentum, the volume, the selling pressure is still very big. That's what you are using it for. Use it to identify the momentum so that you can make decision when you are doing your analysis. Are you following now? So decision you are making based on this, you look at the momentum. It's very, very important. Very, very important. You get it? It's very, very important. So I'm going to take you through just as fast as possible. Okay? So it's very, 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 very important. Excuse me. Take off this. Okay. So this is super, super important. Now, look at it. The market just help you to look at the momentum. Now, when the market come down here, this is pure price action. I don't know people do anything. Now, what this market is telling you is that let's look at the candlestick. That's where your journey is. Price movement. Now, so forget the color of the candle. Where candle open from and close is what determines that is bearish or bullish. Now, for instance, look at this candle. This candle opened from here, went up and closed bullish. That means this one will open from where this one closes in that order. This one open and close, so it closes here. This one open from here, went up and closes here. Now, so this kind of opening and close, we have this candle. Then this sellers overpower the buyers. Okay, sellers overpowers the buyers. So if they overpower the buyers, that means it's selling. Now the next candle came and say, oh, we don't have more energy. Now there are secrets I will expose you to over time if you come into our ecosystem. So that means you see this market here now. You see this market here is what we call swing point. Call it again. Call it after me. Swing point. So swing point means that is a swing now. That is swing high, swing low, right? So if it's a swing point, so what now happen? What happened is that this market has rejected here to sell down. Let's enable the MACD. The volume, the selling pressure is still more. So that means even if I want to sell this market, I can sell after the close of this. So that means I'm going to take this trade, right? And then I will short it from here, and my stop loss is going to be here. Very simple. You will be profitable. Now, the rule of my trade is 1:2 risk reward. So 1 to 2 risk reward, that is done. P, you have made your money. Very simple, right? Good. Now, if you enable moving average on it, let's look at 50 moving average. That's T 50 moving average. Is it 50? Yes, good. So now, since the market is still below 50 moving average, you are still in a downtrend. That is short-term downtrend. Can you see that? This is 50 moving average. Very, very powerful. Can you see? So now, look at your MACD. Look at your MACD here. Very powerful, right? Look at your MACD. So MACD, was turning here. Look at your price action. So it supports your decision. Then you take a trade, right? And then you short. Then the market got here. It's already changing back. Look at your price action. This is what we call change in state of delivery. He sweep the low and then close above it and all of that. That's change in state of delivery. Look at this. Then you are entering the market here, your stop loss below here, the market momentarily, it was still going up, you are fine. Now, MACD start moving here, right? And start going down. This is almost forming a divergence to an extent now, but nevertheless. So the market now created, so because this is three, this is a break of structure, this is a break of structure, this is a break of structure. So you come back here. This is a break of structure. This is now, that means this is a change of character. So the market now have what we call swing failure. It couldn't swing above this point. That's a swing failure. So with this swing failure, that means you confirm the change of character officially. Now here, get it. Now you wait. Now the MACD already saying, you know what, this market is selling. Now you see this market coming back. It's normal. After change of character, you need the market to return back. And then if you take your Fibonacci retracement and take from here to this point, look at it here. So you want to sell, well, we tell every time you're selling, sell from premium. Now, when you want to buy from discount. Look at it. See, MACD has crossed here. So if you enter here, that means you are using MACD to enter. Now, as at the time you enter here, market was pulling back, you'll be afraid. So if you understand price action, you won't be afraid because you know that a market just shifted character. So if it just shifted the character, then that means you need to pull back to mitigate that place that causes that character. So that means look at this, another block, or I call it an opposing candle, and then the market gets rejected here. With this, your MACD is already showing momentum. And then after this rejection, look at a very engulfing candle. Powerful. So even if you're afraid of everything, now it's below 50 moving average. So that means you're trading, you take an entry here if you are scared. For people who are sniper entry, they have taken the trade here because they were waiting for it to get rejected there. But nevertheless, you entered late, no problem. But look at your MACD. Then, yours truly, the market continue. Like you can see now, so you don't use moving average now or MACD as a place to take trade, but it's a point to support your decision. Do you get that? Now, look at it. This is the cross. Now, it's as if I'm returning back. But look at 50 moving average. Say it's going nowhere. I'm rejecting. So that MACD, your moving average, 50 moving average, turn to resistance point. Now, what do? Every time it's below 50 moving average, then you are shorting market from there. Somebody say, I got you. Ooh, ah. So this is the Holy Spirit. Say Holy Spirit in forex trading. So now, look at it now. So the market have traveled. So you are not trading with moving average. Neither are you trading with MACD. You are using them to support as a double confirmation for your decision. Simple. Now, every time the market returned back to the 50 moving average and got a rejection, look at it, got a rejection. Pam, what do? You sell again. That's stacking your position. See the momentum. Market pull back. It couldn't get it. Now listen, the moment market start moving too far away from the moving average, know that there's going to be a reversal or a pullback. A big pullback will happen. And what happened here? Look at it. Oh my God. Come for lecture, ladies and gentlemen. Come for lecture. I'm going to show you a secret that will surprise you. All right. So you are not using MACD as what you are trading with, okay? You are using MACD to support your decision. Stop letting no anyone lies to you. You are using MACD to support your decision. Look at it. So now, see price action here. The market was pressing down, and then we have a fast move down, and then a rally back. This is a long tail week. Then we have followed by a bullish candle, which confirm a reversal or potential reversal. So you now, ordinarily, what you have done is simple. Look at your MACD. It's already crossing, forming your decision. But before even the MACD finish crossing, you already say, hey, you know what? I'm entering this market here. Long position. And then here is my entry. And here's my stop loss. And then, so you can target 1:2 risk reward, which is here. Then the next you target here. Now look at your MACD. See the momentum is coming. Now, finally, when your MACD has crosses, what do you see? You see your market cross the 50 moving average. Retesting back to your 50 moving average is another entry. Move away, retest, another entry. Move away, retest, another entry. So you have entered it already. You allowed that one to move. Look at it. Massive. Then it moved drastically. Look at your MACD. Then when it moved drastically, the MACD didn't cross, didn't give more selling momentum to that extent. Now you have come back here, but your moving average is still supporting the trend. Then that means your decision to enter is by price action. Find this one sweep liquidity here, and then we'll come back. It's struggling. Maybe you want to, okay, let me see when it climb back above the moving average, just to save yourself. Look at what I told you from the beginning, that this guy is going to sell, right? Good. Why? Look at MACD. MACD is telling you that we're in a downtrend. Respect yourself. MACD said you are in a downtrend. So when you come up here, what do you have? You have a high and you have a low. A high, a low. So now, then you have this higher high. That is break of structure. Then instead to now get somewhere here and bounce back, what did he do? He broke this. That is market structure shift. After this shift, what do you want? After this shift, you want the market to rally back. So let's take Fibonacci retracement. This is a high and to this low. And then see the market just travel to the premium, that this is another block. So you don't trade with indicator, you only use it to support your decision. So what happened here? The market okay? So what happened here? The market got rejected here. And now look at this rejection. Look at it. Gets rejected. This is a fast rejection. So at the close of this candle, you are entering and you sell. So this selling now this is a break of structure, right? Now look at your MACD, still showing the momentum. Very simple. Now look at your 50 moving average, say we are down. You know, man, we're down. Now, if you look at using your 200 moving average, that one, it just crosses it and came back and rejected exactly on it. Hey, but some of you say, okay, let's wait when it cross 200 moving average, you enter. No. You are only complementing them, all right? You're only using them as complementary. So they are not what form your decision. They only back up your decision. Now, I've told you that the market need to come back here. It didn't even come there very well because this is fair value gap. So, but if you reject it, so be it. All right? After all, you have entered, or if you have not entered, you are entering here. If I enter here, your stop loss have to go above this candle. And then your take profit, 1:2 risk reward. Look at the MACD. It's still saying, though the momentum not too big, but it's telling you that the momentum are still selling. Bravo. Very simple. This is how you trade. Not because you want anything to replace your decision and then you say, okay, I'm only watching MACD. When MACD cross, you will fail. Say, Felix say you will fail. They don't trade like that. Okay, look at this trade now. Look at this market. This is 75. Now, let me go to 4 hours. This is the place I mark this thing from and I expect a buy point. I actually send it to some of our community. Now, look at what happened here. So this market trying to maintain an uptrend, but it's already showing a divergence. So that means this market will sell. Okay, that's another point I want you to understand. This is what we call bearish divergence. You see that? A bearish divergence. So the MACD is showing a lower low while your price action is showing a higher high. Okay, so look at it. So, and the MACD is what shows the momentum, follow, and all of that. So that means this market will sell. But ordinarily, so there's a contradiction. But even if it will sell, maybe you have a pullback. But if you look at it, the momentum, so this is a divergence. So when you are using your MACD, another thing you must use it for is to dictate a divergence. So look at it. This is bearish divergence. So as at the time your MACD was forming this, so look at it, a high, a low, a higher high, a higher low, a higher high. Now this is the last low. Now, if you take this last low, the moment this market, but am I going to wait till this market actually break? No, but this is the point I try to make here now. Okay, now, so this is what happened here. So this market, the moment it crosses here, it's going to be much sell, okay? Much sell, or it can break this and retest it and you sell. You see the selling will continue. I wouldn't know what this mark I marked here. So sometime I could be marking some things just to teach. Probably maybe I was teaching. So that means this market is going to sell well. Now, so if you look at it, where will it sell down to? Maybe here, because this was the major breakout that happened. Okay, maybe that was what I was trying to even show to people here. So let's clean up this, clean this mess. Clean them. Good. So here, can you see that? This is purely price action. So now, when the market got up here, of course, you are selling here. If you are the one that do buy and sell, but you are not the one that do buy and sell, you are here. And then when the market move up here, you did this. Take your Fibonacci retracement, and you now manage to get to here, and the market retrace back here. That's your entry, right? You go to lower time frame and take position. Now, this is this. A break of structure has happened, but remember your MACD have told you a divergence. If not, you will know, okay? So here, market move this way. Look at it up here. Now, market is still in a prime place that can bounce this, but I doubt. So you have this now. So you have this. If you mark this point, so let's look at it here. You have this to this point, okay? Because this is 70. Okay. So 50. So ideally, if you respect this point, you should be. So this is another block, but I'm not sure it's respecting. So selling is taking over already. Okay? The selling pressure is getting more higher, okay? The selling pressure is getting more higher, okay? So you can see the market now. So, but you have to still be very careful here, though. But nevertheless, the selling pressure. So you see now when the market travel up here, you already seen divergence. Look at it. You already seen divergence, right? So since you have seen divergence, what are you doing? You're doing this. You already look at the market in this dimension. Oh, this is already a divergence. Then you have this. Up. Look at this candle, power of 3. This is engulfing. Now, this engulfing, you probably will not take it, or depending on the type of trader you are, you want to go down to lower time frame. So you go down to lower time frame. Maybe when you see it on when you see on the 4 hours, you want to go to how many minutes? 15 minutes. So let's travel back to 15 minutes. Let's travel back to 15 minutes. Come on. Good. So now this is 15 minutes. So that's what we marked. So if you look at that 15 minutes you marked, you will have seen this, a break of structure. So this is the shift. So you have to mark this shift, then probably allow market to travel, or you just want to get into the market as prompt as possible. So now this was not too clear, to be very sincere. So, but if you take a trade here, so your stop loss is going to be above here. So you have no fear whatsoever, all right, because you have seen a divergence. So when the market return back here, you're only finding more entry. So there's some entry or there's some market structure or setup that you don't over-label yourself because they have defined themselves. Instead of traveling here and there, moving here and there, you just allow the market roll, right? So look at it here, right? So stretch further. So 1:2 is already done 1:3. You have taken profit. Now it travel back. So let's go to 4 hours back. Now go to 4 hours. Good. So get to 4 hours. You can see that. So you can see that you had a sniper entry. So once you go to 4 hours, you just allow your market to run. So you can see you have a sniper entry. Where should be your target? The place of the point of area of focus here should be your target. Oh, yes. Now, if that is your area of focus, that was 1:6:1, right? Your stop loss will be very insignificant. Now, when the market get there, do you now immediately stop it? No, you have taken some profit and allowed the market to run and let it give you a counter signal. All right, a counter signal is supposed to come. But how do you think this counter signal is going to come when we have a divergence? The moment MACD now crosses. So can it see happen that market return back up? Yes, absolutely. But the moment the MACD crosses, just the way you see all of those crosses they were doing over here, the moment it crosses like this, then you know that the momentum will continue downward. You said? Very, very simple. And that's how you manage your trade. So indicator is not bad, okay? Indicator is not bad, but you don't allow it to replace your decision. You make decision and let it support your decision. You use it for verification, double confirmation, and all of that. Can you see what I told you about this? Can you see the sell? The sell continue. The sell continue. All right. The sell continue. So we go to 15 minutes. Can you see your MACD too? So look at what I told you here. So the person who take this entry and take small entry and later expand and all of that. So you can see the trade. So if you go to 15 minutes right now, you're going to see the market selling, right? So you make decision, you don't guess, okay? Like I told you, look at it. Rejection because you're looking at the fair value gap. Look at your MACD. See if, oh, we're going. No, more sell again and all of that. And then you already know that, hey, you are coming down to this point. So there's a liquidity here. So what you now do is that at every liquidity point, you place some take profit. So that market get there, it could return back, sweep the liquidity. Remember what I told you from the beginning of this training is that liquidity is the fuel for price. Liquidity is the fuel for price. So when the market gets to liquidity, you are cautioned because it can react from there. So liquidity is a fuel for price. Do you get that? Liquidity is a fuel for price. So you have to understand that. Okay? You have to understand that. So you can see this market, I told you that you don't conclude yet. So you can still rigmarole and all of that, but I doubt if there's anything good that was going to come out for this guy here, because I told you about the MACD divergence. If you look at it on 15 minutes, the MACD is still having more selling momentum. Are you following now? I hope you are getting it right. Very, very simple and very, very loving. And that's how trading is. Trading is simple if you can actually pay attention to simple instruction and obey them accordingly. So this is going to sell. Though it's dragging here because it's an area of focus and all of that. But eventually, what will happen? It will sell. That's the truth. So if you have a selling position you are holding, you don't jump out immediately. You only trade the stop loss and allow it to run. Thank you very much. You want to be part of our ecosystem? All right, go to comment section. I'm interested. And of course, you can join the free Telegram group and WhatsApp group. And then from there, you can join PBS Club or PBS Market Explorers and all of that. So that makes sense. You're going to make a lot of money. You're going to help your family, yourself, your everything, so your finance can get better. All right. So my name is Felix. I'm the team leader of Plan B Express. Plan B Express, together we rise. Bye for now. Have a nice time.